In today's video, we're going to be taking a look at the US election and how it can impact Bitcoin's price action and the wider crypto market. Yesterday, we saw Donald Trump talking at the Bitcoin conference, and these are some of the key points he spoke about yesterday. He is suggesting that he will fire 𝗕𝗓𝗪𝗓 and appoint a new SEC chairman. It will create a new US government strategic national Bitcoin stockpile if elected, and that the US government will keep 100% of the Bitcoin that it owns. He suggests that Bitcoin will go to the moon and that everyone should never sell their Bitcoin. Bitcoin will probably one day surpass the market cap of gold. And he will never create a CBDC while he is the president of the United States. Bitcoin will and crypto will skyrocket like never before if he is elected. Now, Bitcoin is not threatening the dollar. The current US government is threatening the dollar. And basically, he is suggesting that the United States will be the crypto capital of the planet and the Bitcoin superpower of the world. So with all of these things in mind, I wanted to spend some time today to actually reflect on the price action of Bitcoin in relation to past US elections. And actually, there's a few really powerful insights. As I get into today's video, smash that like button. If you're new to the channel, subscribe. And let's get into it. Okay, guys, we're going to take a look at Bitcoin here paired up with the US dollar. We're on the 1 week Bitstamp chart here. And what I've gone and done is I've basically highlighted key years across Bitcoin's history here. Okay, starting all the way back in January of 2012 here. This was an election year. Okay, a US election happened here in 2012. And so what I want to do is I wanted to spend some time reflecting on the current price action during these years of elections and actually kind of see whether there's a pattern that forms. And spoiler alert, that there is, right? And so let's go ahead and reflect on everything that's going on, right? So in 2012, there was an election in the US, okay? And in that moment, we saw some interesting volatility for BTC, okay? There were some moves to the upside, okay? Generally speaking, this is pretty consistent with the election year. We actually saw a lot of volatility, though. It wasn't straight moves. We saw, good runs to the upside with peaks and troughs, right? So we can see a 331% from a low to a high during that year. But there's also a lot of volatility where we saw a reasonable amounts of crashes, 56% for example, before rallying on up. Now, after the election year, as we get into 2013, we actually had a bull market high. There was actually a double peak in 2013. We had this initial peak here, and then we had the second peak. And this all happened 1 year after the election, okay, after the election year. So this is really important to understand because if there's a pattern here that the election year is an important year, it's a precursor to a bullish market, then we want to know about that, right? So in the year one or post-election year, we can see that there was a rally, an initial rally of 1,930%. This was then met by a crash of 82.65% before we rallied up additional 2,484%. Okay, so we note that there's a lot of volatility in the early days of Bitcoin. We can also note that we have a green line on the chart here coming down. This is the Bitcoin halving event. A lot of people believed that the Bitcoin halving event was the catalyst for bullish markets. But actually, after drawing out the kind of election years and of course taking into consideration interest rates, hikes and cuts, actually I'd say that this Bitcoin halving event, although very important for Bitcoin, actually was quite coincidental in where it fell in line with everything else. Okay, so we're not going to focus terribly too much on Bitcoin halvings because actually I think there's other things at play here that's more important. It's important to also understand that the price action is driven from supply, demand, and of course the currency in which it's paired with. Okay, so in the case here, we have Bitcoin US dollar, right? Which basically means the supply of Bitcoin is quite important. The demand for buying Bitcoin is quite important, but also the strength of the dollar is important. So the DXY is important. If the dollar index, for example, skyrockets, well, you're going to have a drop in the value of Bitcoin. You're going to need basically less dollars to buy up Bitcoin, essentially. Now, if, of course, the dollar index does drop down, well, well, you're going to need more dollars to buy Bitcoin, right? It's all to do with the value of the dollar and in relation to the intrinsic value of BTC. Again, many different currencies have different angles on that, but for the most part, we're just going to stick to the dollar, stick to the Dixie, and all that. So the election year being a pretty interesting key year, it's a precursor to the post-election year, which actually sees a big run to the upside. Year 2, so 2 years after the election, well, we see the bear market low points coming on in. Okay, and that's also quite an interesting thing to keep an eye on. So as we kind of had that peak to the upside, we can see that, we had a bear market come on in here on the year 2. That's actually a little bit of overlap on both sides here. So a little bit over a year. So the end of 2013 and the beginning, so up to January 12th of 2015, was an 86.9% move to the downside. A little bit of volatility in there, but year 2 is a bear market, which then brings us on to the pre-election year of 2015, where we have the bear market low point and we have that initial rally to the upside. Again, this is basically a reasonable amount of volatility. We're kind of just ranging sideways, but we do see a low and a peak of around 229% during that year. Election year is very much the same. Not a lot going on. We are making a little bit of progress to the upside, some peaks and some troughs, but nothing terribly too major. But like I said before, year 1 comes along, and as we enter into 2017, what do we see? Well, we see another bullish market and a great run to the upside of around 2,517% during that year. Of course, we can take into consideration the bear market low point. We can also take into consideration that in the election year, there was also a Bitcoin halving event. Also interesting to take a note of that year 1 is where, of course, we see the peak of a bullish market. Okay, so pre-election kind of sees the bear market low points kind of easing out of that. The election year in itself, we see great runs to the upside, kind of getting ourselves ready for a big bull run. And then year 1 or post-election year, we see, of course, a peak in that bullish market. So year 2 comes along then, and year 2, of course, brings in our bear market. Okay, so here we are in 2018, and we have that bear market. A little bit shorter, a little bit of the end, so December of 2017, down 84.12% by the end of 2018. Our pre-election year starts off quite well. We see, for the first 3 or 4 months or so, not a lot going on, a little bit of a run to the upside, bit of a collapse, and of course, we see, 2019 actually starting to bring in some strength back into the market. The election year 2020 comes around. Of course, we have the pandemic, and we see a little bit of growth and a little bit of strength coming back into the market like we saw the year before. This then leads us into, that's right, year one or post election year with a double peak scenario when it comes to the bullish market, but a bull market nonetheless. And here we can see a rally up to that $69,000. Now, year 2 comes along, and of course, we end up in the bear market. And the bear market also has a low of the FTX crash of November 2022. Okay, that then takes us over into 2023, where we have a pre-election year. We see strength coming back into the market. Again, a lot of this was kind of driven from the idea of, spot ETFs and things like that, trying to fuel the market up a little bit. And then, of course, we get into the election year, very much the same as the year before. See some strength coming in the market, but we do see volatility as well. Okay, so as I zoom out of this and we start to take into consideration everything that we can see in the charts, what are the common denominators? What do we see? Well, we can see that the pre-election year and the election year are precursors to post-election year. And it is the post-election year, or what I've called here +1. This is the bull market peak year. And that is set to be 2025 for crypto. Okay, so if we were to continue following this pattern, as we have done before, the election year happens to fall with a Bitcoin halving event every single time. We've seen that. Okay, the year following the election year has been the peak of a bull market back in 2013, back in 2017, back here in 2021, and potentially 2025, okay, which means that 2026 will be the low of our bearish market. gearing us up for great accumulation during the next year, or the pre-election year, because that's how I look at it. I say that, the bear markets are great for accumulation. They're great for building out your positions. It's great for doing your research and understanding what's going to be happening next in the next big bull run. But the pre-election years are the accumulative phases. These are where you want to be buying. Okay. And so we've kind of been through that. The election year gives you a second opportunity if you're a little bit late. Okay. So you can still be accumulating ahead of year one bull market highs, as we have seen time and time again. And for the most part, I look at the charts and I'm saying to myself, this looks like a great way to kind of be looking at taking advantage of all the dips. And we've seen altcoins crashing down very aggressively over the last few months or so, and present themselves with some fantastic opportunities to dollar cost average into huge positions ahead of what happens next. Now, we obviously talk a lot around, ETFs and the potential of ETFs, the Ethereum ETFs, the Bitcoin ETFs, whether there's going to be Solana, XRP, Cardano ETFs. The world's opening up to so many different angles as well. And just think about, real world assets and so forth. There's a lot of legitimacy coming to the crypto market. And when we take a look at how the US elections have played, or potentially have played, a critical role over BTC, we can also note that there's definitely a lot of hope still in the market. Although right now it might feel like this thing isn't going anywhere. Maybe the bull market is over. If history does repeat, then we are going to be in for a hell of a bullish market in 2025. So you guys can let me know what your thoughts are on all of this in the comments below. Do you agree? Do you disagree? Do you think the US elections have a direct impact on the price action of Bitcoin and the crypto market? Or do you think it's actually more to do with the Federal Reserve and how they are controlling monetary policy, whether they are cutting interest rates or whether they are increasing rate hikes and things like that? Maybe I'll do a whole separate video taking a look at the impact of the Fed on the Bitcoin's price action. Let me know if that's something that you would like in the comments below. If you found today's video useful and informative, smash the like button. I do appreciate that. If you are new to the channel, go ahead and subscribe. And if you haven't done so yet, go ahead and check out my second channel where I go through a lot of technical analysis. You'll find it right here.